Hello students, welcome back to the lesson of business studies. Today I'm going to explain to you the difference between the capital market and money market and about the stock exchange. So first of all, let us check the difference between the capital market and the money market. So the first difference is on the basis of duration. The capital market deals in medium and long term securities, but the money market deals with short term securities having maximum term of 1 year. On the basis of instruments, the common instruments of capital market are equity shares, debentures, preference shares, etc. And the common instruments of money market are treasury bills, trade bills, certificate of deposits, commercial papers, etc. The third difference is on the basis of safety. The instruments of capital market are riskier in respect to returns as well as the principal repayment, and the instruments of money market are safe or less risky due to the short duration. In terms of expected return, the expected return is higher in capital market and the expected return of money market is less due to short duration. And the last one is on the basis of types of capital. Companies approach capital market for fixed capital requirements, and companies approach money market for working capital requirements. Now we will check the meaning of stock exchange. So basically, a stock exchange is an organization or a body of individuals which is established for the purpose of regulating and controlling of business in buying, selling and dealing in securities. I will explain to you with an example. The question is, why do we go to the market? When we need something like books, vegetables, fruits, or some stationery items, we go to the market. Similarly, when we want to buy shares of a company or we want to sell the shares, we go to the stock market. And the buying and selling activities of shares can be done online. Now, you might think, why is the name given as stock market? So, a stock market is a market where we buy and sell shares or securities. So, when we join up all the shares together, we come up to the word called stock. It can also be called as share market. So, the main purpose of a stock market or a stock exchange is to facilitate our transactions. If you are a buyer and wish to buy some shares, then it helps you to find a seller. And if you are a seller of shares or securities, then it helps you to find a suitable buyer. So, for buying and selling the shares or securities, we have two stock exchanges in India. Bombay Stock Exchange BSE, which was the first stock exchange of Asia, and the other one is National Stock Exchange NSE. Stock exchange is also called as secondary market because here the shares or securities are not directly bought or sold from the company. We buy the shares from someone else who already have it. That means we deal with second hand securities in stock exchange And that is why the stock exchanges can also be called as secondary market. Now we will check some functions of stock exchange or secondary market. Number 1 is economic barometer. A stock exchange is a reliable barometer to measure the economic condition of a country. The rise or fall in the share prices indicates the economic condition. Second point is pricing of securities. The stock market sets the prices of securities on the basis of demand and supply factors. The securities of profitable and growth oriented companies are valued higher as there is more demand for such securities. Next is safety of transactions. In stock market, only the listed company's securities are traded and the listing of the company's name depends on its soundness and profit earning capacity. This ensures safety of dealing through a stock exchange. Next is contribution to economic growth. Securities of various companies are bought and sold. This process of disinvestment and reinvestment helps in capital formation and economic growth. The fifth point is liquidity. The presence of stock exchange market gives assurance to investors that their investment can be converted into cash whenever they want. And the last one is it promotes the habit of saving and investment. The stock market offers attractive opportunities of investment in various securities. These attractive opportunities encourage people to save more and invest in securities.